Good evening, ladies and gentlemen. I hope you had a good day. Please confirm you can hear me. If you're just joining, I want you to just confirm I'm audible enough. Hello, can you hear me?
Loud and clear, loud and clear, loud and clear.
Oh, okay. Thank you very much. Thank you everyone for joining, and I hope you had a good day today. I am by name Tochukwu Emeka Ume, and I am privileged to stand in for our dear mentor, Dr. Oluyemi Adeosun, who unfortunately did everything possible to be here, but he's uh, he's currently traveling and his flight was rescheduled, so he's unavoidably absent. And I'm standing in for him tonight to anchor the session. But our key presenter is fully around, and it is a privilege. Yesterday, if you were here, we had a very robust conversation around lessons from HR scandal, what every HR professional and leaders must know. That session was masterfully anchored by Dr. Oliemi himself, and we had a robust time learning together. If you missed that session, oh my God, you missed a lot. But then you can still catch up on the YouTube channel.
Video now.
So you can still catch up on the YouTube channel in case you missed it. And tonight we are going into another dive. We are looking at a very critical topic tonight that is valuable for every one of us, especially in the light of the new tax laws in Nigeria. We cannot say it enough. Okay, we started talking about it on this platform, especially a couple of weeks ago, and this will be about the third time we are bringing it in a different dimension, just to make sure that you get all the information. And even today, more importantly, we are looking at another dimension of it, which is payroll practical demonstration. We want to look at how do you really demonstrate this in line with the new tax reforms. And we have none other in the house today than a very renowned person, a HR professional par excellence, in the person of Mr. Adekunle Ishola. I will have the privilege to introduce him to you by reading his profile. And after that, I'll hand the podium over to Mr. Adekunle to pilot the session. Mr. Adekunle Ishola is a chartered accountant and accomplished payroll specialist with over 6 years of progressive experience in payroll management, finance operations, business planning, and human resources. With deep expertise in the outsourcing and offshoring industries, Adekunle has built a reputation for delivering strategic payroll solutions, ensuring accuracy in payroll processing, managing statutory remittances, and advising organizations on complex compliance matters. His ability to navigate the intricacies of Pan-African payroll management has made him a trusted payroll advisor to businesses seeking seamless execution and regulatory compliance in Nigeria and across Africa. When he's not optimizing payroll systems, Adekunle enjoys watching football. He is an avid sports enthusiast and a passionate Chelsea supporter, known for bringing the same energy and team spirit into his professional life. Ladies and gentlemen, please make welcome Mr. Adekunle Ishola. Please, over to you, sir.
Wow, thank you so much, Mr. Shufu, for that wonderful presentation and the introduction. Yeah, so we'll just dive into the presentation for today. Good day, everyone. I hope you guys have a very wonderful day, and I'm truly delighted to be here and to take this practical and deep dive into payroll management, and also especially in line with the new tax law. Okay, over the next 1 hour or more than, depending on how the session, we'll walk through the key elements of payroll, and especially in today's world, and then from understanding the new tax act to dissecting statutory obligations, exploring the various benefits, and then running a live computation demonstration. Yeah. So these are the contents of this presentation. First of all, we'll talk about the introduction, and then you have the new task art, the payroll insights according to the new task art, elements of payroll, remittances, and what actually constitutes payroll remittances in Nigeria, and then pension in Nigeria, PFAs, PFCs, and all of that. And then we do the payroll, allowable deductions, and benefits in kind. And we also look at the personal income tax when it comes to the current system and the new system that will be adopted in 2026. And we also talk about the tax clearance certificate, what's actually tax clearance certificate, how can you actually obtain one for yourself. And of course, we're going to run through a practical demonstration of payroll in line with the new tax law. So this presentation is going to be in two ways, basically. So I have the theoretical aspect and then I have the practical aspect. It is very, very important that we understand the theoreticals because that's really form the foundation of what we are going to do in the practical demonstration. So I like to start my session with a question, and I think this one is very, very important for us because there's always an issue that who is really responsible for payroll in an organization. So I really like us to just go to the comment section and tell me. I want to know that, in your own opinion, who do you think is responsible for payroll between finance and HR department in your organization? Let's start from there. I'm waiting for your responses. You can do that within the next 1 minute or so. I'm seeing a lot of responses here. A lot of people are saying HR, some people are saying it's finance, some people are saying it's someone even said I strongly think it's HR. Okay. Somebody said it's finance, somebody said it's HR. Some people said it's both, some people said it's shared between finance and yeah, okay, interesting. HR. Someone even gave a reason here. Okay, depending on the structure of the organization. All right. Okay. At least thank you so much for your responses. And to be sincere with you, we'll continue to argue who is actually responsible between HR and finance. And some will argue that payroll is purely financial because it involves money, movement of money, basically tax remittance and all of that, which HR might not be able to do. That's big finance. And but I would say it is under HR because it's deals directly with the employees. But in reality, payroll is a shared responsibility between finance and HR. HR ensures the accuracy of the data and the entitlement, while finance guarantees compliance, funding, and reporting. So it is actually a shared responsibility between HR and finance. Thank you so much for your response and thank you for following. So right now we're going to, I'm just going to give like a brief definition of what payroll is and what payroll management is. I don't want to bore you with a lot of other things. So payroll typically refers to the lists of employees and their corresponding compensation, which might include salaries, wages, benefits, and especially for a specific date or period. While payroll management involves the accurate computation of employee salaries, deduction of remittances and statutory contributions such as PAYE, pension, NHF, and as well as timely disbursement of salaries. So that is very, very important. Timely disbursement of salaries, and then of course fulfillment of all statutory obligations. So before I proceed, during the course of the session, if you have any of the session, if you have any question, you can just drop it on the chat box. When we get to the question and answer session, I'll take them. Okay, so this presentation focuses on payroll in the private sector because payroll is everywhere. Everybody pays salaries, and it covers key components such as allowances, bonuses, tax compliance, and best practice for efficient payroll administration in Nigeria. And then it is important that we know that payroll in Nigeria involves calculation of salaries, statutory deductions, benefits, administration, and compliance with labor and tax obligations. And employers, hello, there's someone that is not muted. We will appreciate if that person can mute, please. Hello, Mr. Tuchuku, can you please help me mute this person?
Sorry.
Okay, all right, I think we can continue now. Okay, and the employers must exceed this. Mr. Tuchuku.
Sorry.
Okay, so I think I will continue now. So I'm sorry for the interruption. So employers must deduct PAYE, pension contribution, NHF, although NHF is voluntary for private sector workers right now, and deductions must be remitted to the appropriate authority to avoid penalties. So because this session is in line with the new tax act, so I just thought it's proper to just give like a overview of what the new tax, because all of us have been hearing new tax act, what it is actually about. So the new tax act is there are 4 major bills that were signed into law by the president earlier this year, in June to be precise. And so what they are just 4, and what they want to do is just to consolidate taxes in Nigeria, basically. And so we have the first one is talking about the Nigerian Tax Act. So this basically brings together all the multiple taxes that we have in the country, from company income tax to personal income tax to VAT, under one umbrella. So it also expands what's qualified as taxable income, and it adjusts threshold for tax calculation, and even introduce a development levy for company. So that's what it. So any law that you're finding when it comes to tax, you most likely find it on the Nigerian Tax Act. And then we have the Nigerian Tax Administration Act. So this governs how taxes are assessed, paid, and enforced in Nigeria. And also it's also gearing towards digitalization. And so it's enabling online compliance, reforms, and audit for tax administrators. But it's also important that we as taxpayers and professionals, we go through the Nigerian Tax Administration Act. And then we have the Nigerian Revenue Service Act. So this practically replaces the Federal Revenue Service as we know today. We will now have Nigerian Revenue Service from 2026. And they will be tasked with managing both tax and other non-tax revenue at the federal level. And so just for us to really understand that the state internal revenue services, they have not been disbanded. They are still operating as they are, and they will still be operating after 2026. So don't let anybody tell you that, oh, because there's a new tax act and then we don't have all those states internal revenue services. No, they're still going to be operating basically the same way from 2026. And then we have the Joint Revenue Board Act. So this just encourage collaboration between the federal and state revenue authorities. So in order to avoid duplication duplication of taxes, and also to promote transparency between state and federal government, basically. So this is just like a brief overview of what the Tax Act is. And then, so I've highlighted some key insights from the new tax reform that affect payroll. Although some of them are not new, they've been in existence for a while, but it is important that we highlight them. So the first one here is exemption threshold for individual. So of course, as you have been hearing, anyone that is earning up to 800,000 from 2026 should be exempted from personal income tax. So that means if your salary is around 70,000 per month, you are not going to be liable to pay any tax. And this 800,000 is the taxable income. So because there can be some other pension have to be deducted from your salary before you arrive at taxable income. So you might actually have, if you are earning around 900 or 1 million, you might actually be tax exempted at the end of the day. And then lower tax payable for low income earners. So again, there's a lot of rumors going around that from next year, you're going to be taxed more. No, you're going to be taxed. No, it's not actually the case. If you are earning an annual salary of 20 million or less, you are going to be paying lesser tax. You are going to be, so far your salary is not, even if your salary is like 21, 22 million, you might still be paid, you might still pay lesser tax from 2026. So this new tax band has made sure that people that are earning low salaries are going to be paying lesser tax. But of course, the government are very strategic, right? They are going to get more tax revenue because how much are they really going to get from people that are earning low salaries? They are not taxing people that are earning more, they are taxing them more. So if you do the math, the government is going to be getting more tax revenue at the end of the day. And then gifts. A lot of people have said, oh, what if somebody gifts me something? What if gifts are not taxable? However, there are some gifts that the tax authority might term as taxable because when it is consistent, when it involves like a lot of money, when it involves when it is basically consistent and every month you are paying somebody 2 million, you are paying and you are saying it's gifts. At one point, the tax authority has to say it's an income. But of course, in Nigeria, it is really, really very hard to enforce compliance. But generally, gifts are not taxable because the gift has already been taxed in the hand of the giver right now. So the receiver is not going to be taxed again. And also, there's a progressive tax rate. It has already been progressive, just updated from 0% to 24%. Before now, it was 7% to 0% to 25% rather. Before now it was 7% to 24%. And then the one that is causing issue right now, rent relief. So there's a rent relief of the 20% of your annual rent or 500,000, whichever is lower. So I think we need to get that straight. Very, very important. So that means if your rent, before you can enjoy this 500,000, you must be paying rent of about 2.5 million to be precise. So if your rent is lower than that, there is no way you are going to enjoy 500,000 because it says that 20% of your annual rent or 500,000, whichever is lower. So this replaces the former consolidated relief allowance that we have this year or that we currently have. So, but there are a lot of questions here. So I might trash some of them out later. But I'll say that for you to enjoy this, you must have paid your rent in the previous year. So if you are going to enjoy it in 2025, your rent must have been paid in 2024. So whether it's from January to December or from June to May or from July to July, doesn't matter, but it must have been paid during the preceding year so that then you now be used for your taxes from January to December for the following year. And then, of course, withholding tax as such applies to consultants and non-resident employees providing service for a Nigerian company. So that means that if you have employees that are not resident in Nigeria, you are only allowed to deduct withholding tax from their compensation, basically. And for consultants, so consultants, they're supposed to like give you, but there's always some companies, they have employees, but they are treating them like consultants. So you have to be very, very careful because if your employees are receiving, if your consultants are receiving what can be termed as salary. The compensation is consistent, is of the same amount, and you are even providing gadgets to them or work tools to them. At that point, they are really not consultants, they are employees, and you really have to be compliant to provide them with the necessary statutory obligation and also deduct from them. So if you are terming someone as a consultant, the person must have an invoice, must have submitted an invoice to you and must be independent of the organization. And then for capital gains tax, so capital gains tax usually is before now is 10%, but now it's now 30%. So that means if you have other income or other gains from or other income, basically you'll be taxed at the same rate as your personal income tax. So there is no more 10%. And also compensation for loss of office. So compensation of loss of office basically means when you terminate an employee and then you are compensating that employee. Before now is any compensation you are providing for the employee up to 10 million naira will not be taxed, and the rest is to capital gains tax. But right now, any compensation you are providing for your employee up to 50 million naira will not be taxed, and any other amount will be subject to PAYE. So I hope you get the distinction. So, and so there are more. So and also, normally your employer is supposed to file your taxes, and you're supposed to also file yours. I'll talk more on that later. And so while filing, if you make a gain from the house that you own, like maybe you sell the house that you currently occupy, and then you make a gain, so that gain is exempted from tax. But if you sell any other houses that you are not living in, you're supposed to pay tax on the gain. And then if you sell up to 2 vehicles in a year, they are tax exempt. So because you are not a car dealer, you cannot be selling cars and be making money. I don't want to pay tax to the government. And then, of course, there's stronger tax administration and transparency now. So the government is trying to make sure that we have like a unified ID across the country. So how that will be implemented is yet to be seen. And then this has always been there. There's the taxation treaty and unilateral agreements. So if you work, let's say you work in Nigeria, you work in other countries, and you are taxed in both countries. So there's like we have taxation agreements with some countries that can serve as relief. So the tax you've paid in one country can be used to relieve the tax you are paying in your home country or your resident country, as the case may be. So that is that about the key insight. I think we will now go into your elements of payroll. So element of payroll basically means everything that you are going to find on a payroll schedule here. And so the first one is the gross salary. So according to the Nigerian Tax Act, all income derived by reason of employment, defined as all income derived by reason of employment, including salaries, wages, bonuses, allowances, whether in cash or in kind, commission, terminal benefits, and other forms of remuneration. So before any deduction or relief are allowable under this act. So it means basically that all your income that your employer is providing, anything that the employer is providing for you or paying you as form of compensation is gross salary. And they are all subject to PAYE, because there are some people say I'm paying commission, it's withholding. No. Withholding tax is an advanced tax. It's only final tax for non-resident individual. It's only a final tax for non-resident individual, not a resident individual. And they are all subject to, and if you are a consultant, you render service to people, of course, they deduct withholding tax, and you can use that withholding tax to offset your actual taxes for the year when you are filing your taxes. So any bonuses you are paying to your employees, they are all subject to pay. And then, of course, we have, so before I go to pay, for gross salary in Nigeria, it's usually divided into basic, housing, transport, utility, and other allowances as the case may be. but because there is no general rule on how the gross salary should be divided. And then because most times pension is usually charged on basic housing and transport. So a lot of people try to divide the gross salary into basic housing, transport, and other allowances, as the case may be. And we have the PAYE. So the PAYE is tax on income that is on payment made to the employees. So as of today, the PAYE is still calculated. We are still using the personal income tax as amended in 2021, but of course there's a new tax band which I'm going to show you, and which is in accordance with the tax reform. So this tax band has moved from 7% to 24% to 0% to 25%. And also we have NHF. So the NHF was also amended in 2022. So it's still compulsory for public sector workers, but right now it's not compulsory for private sector workers. However, I think that everybody should be under this NHF, because if you are because have you actually wondered that those people that are working in the public sector, you see them and you think, oh, these people are on modest salary. Why are they having houses? you say, why are they having houses? And then you think you are seemingly earning more than them. You are still even struggling to pay rent. So because some of them enjoy the NHF benefits. So if you contribute to the fund, which is 2.5% of your monthly salary, if you contribute to the fund for at least 6 months, you can have access to the scheme, and then it can help you to build your house, to fund the land that you already have to erect a building on it, and then it can also even help you to buy a building if you have located one. So you might want to read up more on NHF, Federal Monetary Bank of Nigeria. That is the body that is in charge. You can just Google it, message them. They are very responsive. They will respond. They provide you with all the information that you need, and then you can talk to your employer to actually put you on the scheme, and make sure that the deductions are remitted to the authority. But of course, again, in Nigeria, there's always a lot of bureaucratic approval process and all of that. So it might take you a while to finally get approval, because they might have a lot of people on queue. But it is better than trying to save to build the house, when you can actually access the scheme and then have a house for yourself. So if you're an employer in Nigeria, you have zero reason not to have a house, because there is actually a scheme that can help you too. And then we have the NHIA, or medical cover. So medical insurance is compulsory for all employees in Nigeria, and then all employers are mandated to cover medical insurance for the employees. So the public sector, they still use the NHIA, and then the NHIA, they're also a regulator for the HMOs that you see all around. So because I'm not in the public sector, I think the employee and the employer, they contribute a certain percentage of their basic salary to the scheme. But for private sector, most times the employer take full responsibility of providing medical insurance. And then we have pension, of course. So according to the Nigerian Pension Reform Act 2014, so the pension act is contributory, and the employer pays 10% of your basic housing and transport, and the employee pays minimum 80% of the basic housing and transport. So that is why most of the gross salaries that you see, they're always broken down into basic housing and transport. So now there's no rule about how these basic housing and transport can be broken down. So sometimes you work for employer A, and then your basic housing and transport is around 70%, and then you work for employer B, your basic housing and transport is like 30%. So, and that will really affect the pension that is deducted from your salary, and then the pension that the employer also contributes. So when you are negotiating your offer, you might want to check the percentage, just so you know what is going to be going to your pension on a monthly basis. And this 10% and 8% is the minimum. So your employer can go further, and you yourself, you can also contribute voluntarily to the scheme. And any amount you contribute to the scheme is actually tax allowable. And then, of course, we have the next salary. This is the one that we are most concerned about. What is my take home? I need something that's going to take me home. So this is what you receive after all deductions have been made from your salary. So it's practically gross salary less the deductions, whether statutory deductions or personal deductions, and then you have your take home. And then NSITF, this is paid by only the employer. So it's a government agency that provides social security benefits to employees in case of workplace related injuries, disabilities, and diseases. So if you suffer any kind of injury at work, NSITF is supposed to reimburse your employer. So the employer is supposed to carry the cost, and then NSITF reimburse them. Yeah. And then so it's an insurance, and it's supposed to be paid in advance. And then we also have ITF. So ITF is the Nigerian government agency established in 1971 to promote manpower development through training and capacity building. So if you're an employer and you have more than 5 employees, or your turnover is above 50 million, you are required to contribute 1% of your total payroll to the fund. So most times, the ITF authority, they just request for your financial statements, and then they get to know what is your total payroll cost for the year, and they charge you based on that, 1% of that. And then we have the group life. Also, so before I go to the group life, I think most employers in Nigeria do not take advantage of this industrial training fund, because maybe they think because it's not available, or maybe they think that it's just a responsibility for us to just pay, and they know. If you follow the agency, sometimes they roll out a lot of training programs that you don't need to spend your money. You can actually enroll your employees, and it will actually be beneficial to your organization. And they actually also refund. So if you spend, so while you're contributing to the scheme, which is mandatory anyway, if you spend a certain amount of money training your employees, you can actually get refund up to 50% from the commission. So you might want to look into that, especially if you are an HR. And then so there's group life. Group life is also mandatory in Nigeria under the Pension Reform Act. So it requires employers with at least 3 employees to provide life insurance. So this is just life. So so we pray that nobody should die, right? But death is inevitable. So in the case that there's a death of an employee, the group life insurance will pay will provide compensation of 3 times the annual salary of the employee. So it's a lot of money, but that doesn't mean you should go and die, please. So yeah, and so it is a mandatory requirement in Nigeria. And also there's leave allowance. So this leave allowance in Nigeria is not mandatory, but some employer they offer it as an additional benefit. So the only thing that is mandatory in the Labour Act is 6 days leave for a whole year. So if you look at it, just 6 days, but most employers actually give between 15 to 21 days. So, and it is at their own discretion. So, and of course, there are other allowances, 13th month, commission, profit sharing, and all of that. So all these allowances, they're actually taxable, but in practice, there are a lot of minor allowances that you can't be giving people 10,000 for internet, or to recharge their phones, or for transport, 10,000. You still want to, unless it's already part of their gross salary. So you might not, it might just be the employer cost. And then, so what is taxable? Allowances are taxable, but reimbursement are not taxable, especially when they are supported with invoices or receipts. And then there's termination benefits. So like I said, there are compensation for loss of office of up to 50 million in tax exempt. Before now, usually 10 million, and the rest is subject to capital gains tax. And also gratuity is also tax exempt. So if you are paying gratuity to your employees, most employers rather, I don't think they actually pay gratuity, but some do. So if you are doing that, you are actually it's not taxable, and it's different from the commission for loss of office. It's different. So if you are paying both, that means the employee is going to enjoy the commission for loss of office rule and also the gratuity. So I think we are moving to. So earlier I mentioned benefits in kind, which is also taxable. So when a company assigns like a car to an employee, they're supposed to get the 5% of that car value and treat it as taxable benefits, so which will be added to the employee's income. And then if an employer also provides accommodation, they're supposed to get like the rental value of the accommodation and also add it to the employee's taxable income. If an employer also provides domestic staff to you, they are supposed to also value the costs that the employer has incurred and also add it, because all these are benefits. And if you exercise share option, you are supposed to also pay tax on the difference between the market value and the exercise price at the time at which you are exercising that option. Okay, so I did a table here that shows all the so I know most times you are concerned about your net salary, but really, apart from your gross salary, your employer still has to pay some allowance and bonus to you, still has to pay NSITF, still has to pay ITF, still has to pay their own contribution of the pension, still has to cover you for medical, and still has to cover you for group life. So maybe sometimes you need to pity your employer. Yeah. Yeah, so this like a so I know net salary is the one that is you are most concerned about, but that is not the cost to the company. So this table summarizes everything we're talking about: the PAYE, the pension, NHF, the acts that support it, the rate, the minimum cover, and the due date. So in order not to waste time, I'll just move to the next slide. Okay, so this is what we call eligible deductions. Under the new act, they call it eligible deductions. And I've discussed the rent relief before. So you get relief for 20% of the annual rent that you pay, or 500,000, whichever is higher. So that means if you pay 3 million naira, you are still going to get 20%. Or you are still going to get 500,000, rather. So you can't get more than 500,000 in any way. And then the pension that you remit or that's been deducted from your salary, they are also tax deductible. So that means they will not be taxed. So if your salary is, let's say, 500,000, for example, and then you get the rent relief of, let's say, you got 100,000, and then your pension is like 50,000. So that means your taxable income is basically 350,000. And if 350,000 is your annual salary, for example, that means that you will not be you will not pay any tax at all because it's below the 800,000 minimum wage. So just for you to understand. And then of course, if you contribute to NHIS, which there is practically no private sector employee to actually contribute to NHIS. And then NHF, you contribute to NHF. So that means NHF is like double benefit. If you are contributing, you are not going to pay tax on it, and you might also get benefits from Federal Mortgage Bank for contributing. And mortgage. So this one, I don't think many people know that if you have a mortgage on your property or the house that you live in, you can actually get relief for the interest on what you are paying on the house. So let's say you got the house for 50 million, and then the total money you are paying is 50 million, and then the interest on it is, let's say, 5 million. So that 5 million is an eligible deduction for tax purpose. So far you can provide all the documents and all of that. But you also know that mortgage is usually spread 4, 5, 6 years. So it's only those that are applicable to a particular year that are going to get the interest. So you can't get the full money when they are. So you get it on a year by year basis, and it has to be approved by the state internal revenue service. And then also life insurances that is paid for that's being paid by the employee or that's paid for their spouse. So if you have life insurance on yourself or your spouse, you can actually get relief for that. And so if you are paying for your spouse, it has to be you that are paying, not that your spouse pays and you say you can. No. It has to be you that are paying for your spouse, and of course pay for yourself. But if your spouse pay for you, they can also enjoy relief. And this is just for spouse and yourself, not your parents, not your children, because in insurance there's what we call insurable risk. You don't have insurable risk on them, because really if you look at it, you're actually paying. You are spending money on them. Really, there are financial problems to you if you look at it from insurance perspective. Yeah. And of course gratuity, we mentioned it earlier. Yeah, so those are statutory allowable deductions that are available for employees in Nigeria right now. And then I want to say something about pension, because there's always a lot of people don't understand how pension really works. So we have the PFAs. So we call them the pension fund administrators. So they manage your pension fund on your behalf. And the PFAs are the ones that you know, really, the Leadways, the Sterlings of this world, the Sterling Crusaders, ARM, Stanbic IBTC, and the rest of them. Why the pension fund custodians? They are banks. We have a lot of pension fund administrators. Like there are a lot. I think there are more than 20. But pension fund custodians, they are just about, I think, I'm not sure they're up to 10, because they are banks, really. And then so they are the ones that are in custody of your fund. And whenever you request for it, the PFA will give them the approval to disburse to you. And then we also have the voluntary pension contribution. So that means that you can actually contribute more to your pension. So let's say you are contributing 50,000 naira right now. So you can decide to voluntarily contribute additional 20,000, and you also get tax relief for that, which is really nice. And then you have the RSA account. That is the account that your pension is being contributed to. I also think a lot of us, we don't know that we can actually negotiate the band at which the pension fund administrator they can put us, because at the end of the day, you are saving your pension for the future. And they have a lot of investment scheme that if they move you from one to the other, you enjoy more. So you might really want to talk to them and say, I want to see my statement. And then you try to check. They're not giving me anything on it, and try to negotiate with them. Let them take you to the highest one or the highest possible one, so that you can really enjoy the benefit of having your account with them. And then also I want to mention that you can actually switch pension fund administrator. So if you have a trust fund today and you think that somebody has Sterling Crusaders has wowed you, and you want to use their service, or you've seen that their service is better, you can switch even with your current pension PIN. So you don't have to open an account in a particular fund and then you stay there forever. You can switch as the case may be. You have the liberty to do that. And then more on pension. So employees that are unemployed for 4 months, they may withdraw up to 25% of their from their pension fund, and it is tax free. And then retirement benefits. So if you retire today, you can access up to 50% of your pension fund. So if you are 50 years and you are not retired, you cannot access the fund. You have to be retired. And if you are retired and you're not up to 50 years, you cannot also access the fund. So you should bear that in mind. So, and then you can you can access up to 50% when you meet the criteria. For employees that are unemployed for 4 months, they can access up to 25%. And then when you meet the criteria, so the balance after getting 50%, you can place the balance on either program withdrawal or on annuity. So program withdrawal is just basically that. So this balance that is remaining, pay me on a monthly basis, pay me on an annual basis or a quarterly basis, depending on how you want it. And then for annuity, so that means now you are buying an insurance. They are going to pay you for life. So you use your balance to buy an insurance from an insurance company. That is the PFA. Most times they do not offer that service. So you just take but they facilitate it for you and then use it to buy annuity from an insurance company, and then they pay you for life. And so the scheme is regulated by the National Pension Commission. So because a lot of people say, oh, I don't want to put my money in one pension. I don't know if I'm going to have access to it later. No, you are going to have access to it. So it is regulated, it's well regulated. And then if you make voluntary contributions, you can actually assess that voluntary contributions at any time. So your voluntary contribution is different from your normal statutory contribution. So if you have voluntary contribution, you can assess it. And if you assess it within the first 5 years, it might be taxed, but after 5 years, it's not going to be taxed. And then also it's important to note that there are ongoing plans to introduce USD remittance for employees earning in foreign currency in Nigeria, and for Nigerians living in diaspora, so that they can also enjoy pension when they get old. And then, so employers must really remit pension, because if you fail to remit pension within the stipulated period, you are liable to pay 2% monthly penalty on the outstanding amount and interest at the prevailing CBN rate. So both are payable into the employee's account. So if the employer is owing you pension, you can actually owe them and then get more money from them. That's just something like that. And then, so this is the PAYE tax band, you have the old tax band, new tax band. So looking at this, you see that if you were earning 9 million naira right now, you'll be taxed 9 million naira on an annual basis. Yeah, annual basis. So you'll be taxed at around 18%. But before, you'll be taxed at around 24%. So which one is lower? 18%, definitely. And then, so it's just that if you were earning 50 million naira before, you'd be taxed around 24%. But now it's 25 million. Yeah, and then even some of your income will be taxed at 25 million. So that is where they are really targeting those people that are earning a lot of money. And then, so this is just an overview of what changed nothing else changed apart from this, really. Nothing changed. And then, so this, I just did like a comparison of someone that is earning 100 million before and 100 million in the new year. So the person is going to be paying more tax, obviously. And so there's a link here that goes directly to the tax. So there's a tax table that was shared by Mr. Taiwo Oyedele. So maybe when you have this slide, you can just click on it to take you directly to the site. So this is just a brief comparison. During the demonstration, I'll also show you some other comparison. And then, so TCC. So a lot of employees complain a lot. I need to get my TCC in this one. So for you to get your TCC, you also have a part to pay. You have a part to play, basically, not only your employer. So as we know, TCC is just like an official document that shows that you have been paying tax, or you have fulfilled your tax obligation for the past 3 years at least. And for companies, it is Federal Revenue Service. And in the new year now, it's going to be Nigerian Revenue Service. Why for state, which is individuals, for individuals, it's actually the state that is responsible. So this is the state's Internal Revenue Service. So there are 3 key requirements. First, you must ensure that your employer will pay your tax on a monthly basis. And then secondly, your employer must have filed your tax by January 31st of each year. And then if you actually file your tax, you get a notification. So it's not as if it's something that you have to really ask them. And by 31st, really, they will have filed, because that is the deadline for filing for employers in Nigeria. And for you as an individual, you have to also file your own tax by 31st of March of the following year. So, and the way the tax run is from January to December. So that means before you can actually get your TCC, you should have, did you file yourself? Most people don't file and they say, I don't have my TCC. You have to file. So, but there's a most, so I think the next slide talks about filing. Yeah, okay. So for you to get your TCC, you just have to go through some of these steps. First, most Internal Revenue Service or State Internal Revenue Service, they have platform that allows you to actually file your returns. And if you follow the instructions on the platform, you will be able to actually file. And some of them also have customer care services, especially for Lagos State. If you message Lagos State right now, they are going to answer in the next 5 minutes. I think that's far within the next 1 minute or 2 minutes. So, and they are going to guide you through on what to do for you to be able to get your TCC. So immediately you follow all those steps, you actually get your TCC. But the problem that arises right now is because some employees, they work in multiple states. And if you work multiple states, you might not be able to get your TCC because the TCC rule is that you have to have worked in a particular state for 3 years. And sometimes it's difficult to get, especially when there's a break. You work in Lagos for 2 years and you're working in Abuja for another year. But that is what the Joint Task Board is now trying to make sure that doesn't happen. So even though you work in different states, you might actually still get your TCC through the Joint Task Board. Hopefully it's implemented. This. Okay. Can you still hear me? I don't know what's wrong.
Loud and clear, we can hear you.
Okay, all right. Okay, all right. So these are sample of TCCs that you can actually get. So this is Lagos State. The one on, I don't know how it is on your, but the one on my left is Lagos State, while the other one is, I don't know why this is coming. While the other one is for Kitty or something. So Ogun State. Okay. No, what's wrong? Something is popping up from my end that is distracting me. Don't know what's wrong. Why this thing? Okay. Okay, I think we're good now. Okay, I think we're almost done. Yeah. Okay, and also, of course, there are payroll platform that all these things I've been saying. There are payroll platform that can be used to actually prepare all this payroll. So, of course, you have to have the knowledge, but there are a lot of payroll platforms. So, from Seamless HR, Sage, Payroll, Workday, Deal, Workforce Africa, Payroll. Actually work at Workforce Africa and you can reach out to Workforce Africa to provide you payroll services. And any other, or reach out to any other, but Workforce Africa, I can vouch for what we do, right? So you can use payroll platform and then to allow you to calculate all these statutories seamlessly and also provide payslip. Yeah. So at this point, there any questions before we go into the practical demonstration? I'll be happy to entertain them. Thank
Okay,
you
sir.
for staying so far.
Thank you very much. That has been so explosive. Because when we start the conversations, we might take a longer time. I don't know if it is okay, just do the demonstration quickly and we'll come back to the questions.
Okay. I think that's fine. Okay. Okay, start from here. So again, you can hear me, right?
Loud and clear,
Yes.
sir.
Okay, all right. So again, so this is like just so I did like for a junior level staff, someone that earns 600K right now, for example. So this is the PAYE. So just look at the take home really. So this is the take home, 482,000. But in the new tax law, the take home is 485,000. So it's actually higher. Of course, it's not a lot, but it's still higher by 3,000. So, and then for someone earning 30 million naira in a year, so you have person going to pay. So the take home is lesser here. You can see 1,921,000, whereas person was earning on the same gross salary. Person was getting 1,946,000 before. So that means that if your salary is in the range of 30 million, you are going to get lesser take home starting from next. And of course, someone that is on 102 million naira on a yearly basis, so the person is definitely going to earn lesser. So far, the salary was not increased, so we pay more tax fiscally. So this is I hope you now know that unless you are earning so much, probably you will not pay more tax. Okay, so this is a period I've rated for us. So payroll typically has all these details. So of course you have to have your staff ID, your staff name, their date of resumption. So date of resumption is basically useful because at the time of termination, so that you know, usually when you have severance pay or other kind of termination benefit. So date of resumption might be useful. Then you have the gross salary, so there are rows. So this is so I've broken down the gross salary into 5 components: basic, housing, transport, utility, and all of that. So what I did here was that because I want it to be uniform and easy to compute, right? This place, so this place, there's actually some percentage there. So that's percentage that I used for calculating my gross salary, for breaking down my gross salary. So I just had to white it out. So if I just so it doesn't look, my payroll doesn't clumsy. So it's here, but of course you can't see it. It's more or less invisible. Yeah. Okay. So that's what I used in calculating the gross salary, and there are other bonuses. So this PAYE is linked. I'll come back to it. So this is pension, just straightforward, 8% of the basic housing and transport. And if someone is contributing, NHF is voluntary. So we have someone that's contributing to NHF, and then also somebody is also contributing to pension voluntarily. And if there are any other deduction that you are going to deduct from the employee salary, you have it. So this is your total deduction. So these are your deductions basically. And then of course, if the employer contribution. So some companies they just stop at this take home. But really you need to have your total cost so that it's easy for you to do your comparison, your employee cost comparison, and a lot of other things. And also for you to even know what the total cost of that employee in your organization. So you have 13th month, if you pay 13th month, you pay leave allowance, stuff. But NSITF is compulsory. Of course, you pay together, because when you are paying, you're not singling out one employee to pay for, to cover for. But it's just important for you to note that there are costs that you are spending on behalf of that employee. And of course, ITF is also going to be paid on a yearly basis. And then your pension, the group life, if you have medical. So this medical, it depends on the plan that you have your employee on, and if maybe they are single or they are married. So that would really determine the cost. But I just have to put it here. So this is going to form total this, and so this is the total emolument. So like I showed you in the presentation, that you have, so this is, even though this is the employee take home 86,000, and this is the total cost to the employer. You can see, so when you say these people, they don't like me at all, see what they are paying me, but maybe you have to also consider from their own perspective the cost that they're incurring on having you on board. So that is just overview. And then to have a PAYE, so this is the PAYE table. So this is linked directly to this. So I will just briefly explain it. So this is the gross salary has been carried from here. See. So this gross salary includes the 13th month and leave, because they are all taxable. So you might create another column to add them, or you just add, that's I said, taxable gross salary. Yeah. And then when you are in Nigeria, right, the tax band that is given to us is annual, even though salaries are paid on a monthly basis. The tax band is annual. So when you are calculating your taxes, you have to always multiply it by 12, especially for monthly income. But if it's a one-off, you can just bring the figure total to the tax table. But if they are recurring amount, they are going to pay on a monthly basis. So you have to multiply by 12 in order to get the accurate tax. So here, okay. So here you have so here I have Joseph Jimo. So this is, so I added the gross salary, the 13th month and leave. That's what is here. And then pension. So I just brought the pension and multiplied by 12. And then, so these are, so Jimo was also contributing to voluntary pension. So that's also tax allowable, and this was there. And of course, so Jimo's rent for the year is 300,000. Remember that we are assuming that we are already in 2026. So this is Jimo's rent for the year, and then this is the rent relief. So I've put in an if formula that will just calculate it. So if it's 2.5 million, for example, or 3 million, Jimo can get more than 500,000 because of this if formula. So you have it here, and then you deduct. So you are not deducting the rent, you are only deducting the pension, any other allowables, any NHF and others, and the rent relief itself, not the annual rent you are paying. And then you deduct that from your taxable gross salary, and then you have your taxable income. And then this is now subjected to tax. So this is like a very long if formula for you to be able to get your annual. But I'm going to explain how you can actually get this easier than having this or doing this long computation, complex if formulas. And then to get your monthly tax, just divide by 12, and you are good. So if you go back to our payroll, you will see, you can see it's also linked here. So 6,277,000. That is what this employee will be paying on a monthly basis. So it's kind of pretty straightforward. Just need to understand the sequence. And then, so I have another payroll here. So this is just, you know, if you have multiple employees, this might not be the best. This kind of simulation might not, this tax table might not be the best for you to use. You might have to use this one so that everything goes well. But if you just want to do a quick check or a quick simulation, you can use this one. So it's the same thing. So this is the old law, this is the new law. Yeah. So it just but it's broke down how that's have been calculated, like one by one. But everything here has a complex if formula which I have inputted here, and sometimes it's difficult to understand, especially for non-accountant or someone that's not used to using Excel. But however, there's a very simple way to calculate it. So let's say my taxable income, because if you actually look at it, immediately you get here, that is when you start applying the tax band. So immediately you get, you have to remove all your relief, and then you get to the taxable income. That is when you really start applying the tax band. And so instead of using all these complex formulas, you can actually do something like this. So you have your tax band, you have your income threshold, the rates, the tax due, and so this reminder is just for you to know what is remaining. But the thing about this is that you have to do it manually. So this is the this is just a repetition of this, especially from year to year, just a repetition of this. And then you have your rate. So you just multiply it, the income threshold multiplied by your rate, you have this. And then your reminder is going to be the taxable income less 800,000. So this is the remaining income yet to be taxed. You come here again, multiply by the next rate, and then of course you have the last reminder less what you just taxed now. So you have the new reminder, and then so far the income is you still have more income, then you have to keep going. You multiply this, and then you remove the reminder. So you continue like that. And then for the last one, because after 50 million, there's nothing else. So if you actually calculate from year to year, it's 50 million. So those that are doing the rate, they know what they are doing. So if you add all this together to give 50 million. So they are saying anything above 50 million, then you have to tax that 25 million. So which is basically the remainder here. So you just come here, then you multiply it by 25%. Then you have this. So you have your annual tax, and then you have your monthly tax, which is the same thing as what we got here, even though there's a complex formula there. So I can go over this again when it comes to question and answer session. And then it's also important that you issue pay slips to your employee. So I've done like a sample pay slip here. So it can be more complicated than this, but this really is what should be on a pay slip. So the employee wants to see their gross salary, what you have deducted from them, and their net salary. That's basically it. So I think we have come to the end of the session. So I had to do the theoretical so that you understand what we are doing at the demonstration. So if you have questions now, I'll be happy to entertain. Thank you so much for listening this far. Mr. Atuchuku, yeah, you have the floor now to coordinate the questions. Oh, can you hear me?
Yes, sir, we can hear you.
Okay, all right. Yeah.
Okay. So we
yeah.
have some hands up, but before then, some questions had been dropped. So I want to quickly just read out the questions for you on the chat, then we can take the hands that are raised up.
Okay. That's fine.
Starting with the first that I took note of was the question from Deborah Olale. She asked that, so what happens to house owners or the Achalugos who are married to Odogus? I think that was talking about the rent relief calculation.
Rent relief. Okay.
Yeah. And closely followed by that was Ijoma Chinelo, who asked, I think it's when you were talking about the withholding tax and all. She asked, what of if you did not provide work tools to the consultant? So she's trying to ask possibly, how do you compute if you didn't provide work tools? Because you made mention about that. And again, she's asking, are we to submit rent receipts to confirm? And so that's the second question. Adeni Amole asked that, can the private sector still pay 2.5% of basic salary for NHF? So I think you can attempt these three, then I will take the other three questions.
Okay, all right. So thank you so much for that, Mr. Tochuku. Yeah, so for the first one that I asked about rent relief. So yeah, so if you are a house owner, basically you are not going to enjoy the rent relief. You have to have rented an apartment because you can't pay rent for the house that you own, right? Because you are the landlord. So however, so under the act, there's also you can enjoy. So if your house is on a mortgage, you can enjoy interest that is paid on the repayment of that of the loan that you took on getting the house. So, but the rent relief, and if you are a house owner, basically, so that means you are really rich. So I don't think 500,000 is going to do a lot for you. Yeah, and then so for withholding tax for consultants, so if you don't provide work tools, right, it's not only work tools, you have to check other things. If you are paying them, because if someone is a consultant to you, that means that they are offering a service to you that can vary. So if what you are paying them is constant on a monthly basis, you are paying them 1 million naira, 1 million naira. That can connote that individual is an employee. So it's not only the work tools. Of course, if you provide work tools, is more or less an employee, because why do you want to provide work tools? That somebody that is seemingly independent. So you need to check others, anything that you can provide for your employee, or you should be able to provide. You should not be provide for a consultant. They should have it by themselves. And also, if they can give you an invoice, then that makes a lot of sense. I hope I've been able to answer that question. And then somebody asked about NHF. So if you are in the private sector, you can decide to contribute to NHF. So but your employer is responsible for deducting that NHF and also remitting to Federal Mortgage Bank of Nigeria. So just meet your employer, tell them of your intention to want to contribute to NHF and get clarity from them. But so for NHF really, they have a platform that you can actually register on, because you have to have a number that your employer is going to use to remit. You have to send like a schedule to them, just like pension, and for them to be able to credit your account. If you have an account, you can log in on your account and you can see if your employer are actually making those payments. So if they're not making it, you can owe them that they have to make it. So anybody can take advantage of NHF, yeah, but it's just not compulsory for private sector workers. Yeah.
Okay, thank you so very much. Yes, the next question was from Esther, who asked, group life insurance, is it for natural death or accident within the workplace? Then that was followed closely by Ibrahim Aliu's question, who asked, what happened after collecting your lump sum and you want to move from program withdrawal to annuity? Then the last one was a request by Chinyere HR, seconded by Fagbemi Fawaz and many others, asking if you could share this practical Excel sheet you displayed with them. Thank you. So we'll go after this. We can now take some live questions and read some more comments. Thank you. Over to you, sir.
Okay, thank you, Mr. Okay, so for group life, so whether it's an accident we don't pay for or natural death, it is covered. So if it's an accident actually and the employee did not die, NSITF actually covers that, because that is accident, especially when it has to do with commuting from workplace to home or from home to the workplace. So NSITF covers that. But group life is just death, whether natural or natural. It covers group life covers that. And for pension, so when you get your first 50% after retirement of the fund, you can either choose to leave the remaining as program withdrawal, in the sense that what you have there now, they will now be paying you. So they are paying you back either on a monthly basis, on a quarterly basis, or yearly basis, and it is largely dependent on the amount you have and your preference, basically. Because if you have 1 million naira as balance, how are they going to divide 1 million naira for you, really? So, but if you have very little amount, you can actually use that to buy an annuity. So annuity is an insurance that you can buy. So, but the pension providers will help you. They will use your balance to buy that annuity on your behalf, and then the insurance company will be paying you every year till death. So that is just the difference between the two. Most people actually go for the annuity, but the thing about annuity is that, so because you are practically insuring against your life, they might gain. Nobody's praying for death, but they might gain if you die early. But for program withdrawal, whether you die or not die, you are going to get all your money, the balance, you are going to get everything. So they will continue to pay. That's the difference. And then, so for the Excel, of course, I'm going to share. So if you would just drop your email address, or you shoot me an email on a message on LinkedIn, which I'm going to share my name, and then you can just search for me on LinkedIn. You can send me a message, or you can also chat me on WhatsApp. I'll share my number at the end of the session. So I'll share with you. That's not going to be a problem.
Okay, thank you very much. Maybe if it is possible, maybe we can just drop it on the chat to ensure that everyone hears, because when you receive 100 emails, I don't know how you want to respond to all of that. Okay, so let's invite Williams to unmute and ask his question.
Okay, thank you. Good evening, everyone. Thank you so much, Adekunle. It was quite informative. I have a couple of questions. I think it was asked, but I don't know if I missed your clarification on the rent relief. So,
Okay.
for those who have paid their rent, right? Like you said, for the
Mm.
previous year, are they going to be providing receipts? And I'm just thinking of, the gray area around things like, can people falsify receipts, or like what would be the the standard for evaluating and validating what would go into this rent relief calculation?
Mm. Okay.
And then
Okay,
I don't know
that's
if I
one.
could ask all my question, or should I wait for you to respond?
Okay, let me respond to this so that I don't get mixed up.
Okay.
Okay, so for the rent relief, right? We're actually still waiting for guideline from the state government in particular, because it affects the income of individuals on how it's going to be verified. But because there's a cap really, so and it is so this can actually be um a catch for the revenue authority, because if you are earning 2 million naira, okay, don't let me say 2 million. If you are earning 5 million naira in a year, for example, that's your annual gross salary, and then you are bringing rent of, let's say, 4 million. The fact, first, you are not going to get more than 500,000. Secondly, how are you earning 5 million and paying 4 million naira rent? So that means you probably have other source of income. So when you are filing, you are supposed to file those ones into it. So you need to be careful, and also you are supposed to like provide the rent for you to enjoy it, because if you don't provide rent, there's no it's zero. The relief is zero. And other gray areas that is on it is that, okay, so what if I share the rent with somebody, like especially for couples? So how do really, so the thing is, the name of the employee must be clearly shown on that receipt. So if it is going to be, if there are couples, then they have to write their name separately. Mr. So 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 so, Mrs. So 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 so. Yeah. So that, because when the tax authority comes and doing for their audit, how do you want to tell them that they're husband and wife and they are sharing just one receipt without proper names on it? You're just writing Mr. and Mrs. Ishola. There can be hundreds of Mr. and Mrs. Ishola. So the rent receipt has to carry the names of the employee. And so for the verification, just like I said, because there's a cap, and also because ideally when you are earning a particular amount, there's a particular amount you should also be paying as rent. But that's not cut in stone, because you might be earning from other source of income, or you just want to make yourself very comfortable and you're spending most of your salary on rent, right? So, but bottom line is that the employee has to provide the rent receipt, and the rent receipt has to carry the name of the employee and the um and it has to be preceding year. Like if you are enjoying 2026, for example, it has to carry 2020. It must have been paid in 2025. Yeah. So I hope that answers the question. Mr. William.
Yeah. Yes, it does. Just a follow-up question on that. So
Okay.
again, this rent relief replaces what we used to have as consolidated relief, right? And then
Yes.
is would it be applied as a monthly amount, as a monthly lump? Like the rent amount would be divided monthly. Do you get the question?
Okay. Yeah, I get. So the tax table according to
Yeah.
the tax authority is annual. So because it's annual, that rent relief is also annual. So if an employee is earning 500,000 in a month, on the tax table, it's going to be 500,000 times 12, and they can only get only 500,000 as a relief for a whole year. So the 500,000 is for 1 year, and it has to be applied on the annual income. I hope you understand.
Okay. Yes, it is clear.
Okay.
Thank you.
Okay.
So
All right.
the other questions I have, I will just ask both of them so that I don't take too much time. One
Okay.
is, you mentioned when you were talking about voluntary pension contributions that after 5 years you can access it. So I just wanted clarification on when the 5 years starts counting. Is it from the first remittance, like when you first contributed voluntarily, or when you last contributed? Just
Okay. So the other question.
And the other question is for gifts. So now you mentioned gifts are non-taxable, and this is another gray area in where I work. So since gifts are non-taxable now, right, from what we practiced before these new laws now, right, gifts were taxable, right? How does that compare to what we currently do? I just wanted that confidence and that clarification that gifts are no longer taxable. Yeah.
All right. The first one, so concerning voluntary pension contribution, right? So it's from the first month. You start counting from the first month that you voluntarily contribute, and then you must have been contributing for 5 years for you to be tax exempt. You can actually withdraw your voluntary contribution anytime, but it's just that for you to be tax exempt, it has to be after 5 years, and it will come from the first month that you start your contribution. But if you want to withdraw from your fund, you must have been out of job for 4 months. Like you can withdraw from your main RSA account after 4 months of out of employment. Yeah. I hope that answers your question. And then for gifts, right? So you can. So if you are providing, what kind of gifts are you providing for your employees? So if you are providing gifts for you as an employer to employee, what gifts? So are the gifts, are they monetary? If they are monetary, they'll probably fall under commission, bonus, and all that, and they have to be taxed. But if you are, for example, this Christmas, you are buying rice for your employees and all of that, so that, of course, will not be taxable. So it has to be, and if there are other minor things that you are doing for your employees, of course, you can't tax that, unless maybe you are providing like a motor vehicle, you are providing servants, or you are providing share option, all of that for your employees. Apart from that, all other minor gifts, so far it's not monetary. If it's monetary and it's not also like all these phone allowance, data allowance, all those ones might not be taxed. But when we are talking about a huge sum of money, that's is going into, it's more like a bonus and it has to be taxed. Yeah. But for a company, if you are, companies are encouraged to exercise corporate social responsibilities, that is to fund social cause, to fund causes that help humanity, basically. So those donations, they can be allowable for company income tax. Yeah. So I hope that answers your question.
Yes, thank you. I would just let someone else take over. Yeah, thank you so much.
Thank you very much. Okay, all right. Okay, Mr. Atuchuku, there another person waiting to ask a question. Mr. Atuchuku.
Okay, apologies, I'm here.
Okay, all right.
We are going to now move a bit faster because time is no longer on our side. So please, for those asking questions, one question is enough. I see a lot of comment buzzing on the chat, so we can quickly take as much as possible. Moronke, please, over to you.
Okay, thank you very much, sir, for this wonderful training tonight. It's an impactful one. My question is this, sir. in a situation whereby organization that does not remit pension and PAYE and it's being deducted from staff, and the HR has tried every possible means that this should be remitted, but still the consultant gives the organization a a strong hand that they shouldn't worry. There's no point of remitting it, and it's really affecting the HR of the organization. I don't know, what can we do, sir? The pension is being deducted and the pay is being deducted every month, but no remittance is being made.
That's a grievous offense, if you ask me, because if you don't actually deduct, it's an offense. And now you're actually deducting and you're not paying. That's because at the end of the day, the payee that you deduct from the employee salaries, they're supposed to go to the government. And the pension that's supposed to go into the employees' RSA. And if you are not paying it, so that means you are non-compliant. Number one, the government can take legal action against your organization. The employees can take legal action against your organization, because when they're checking their pension accounts and they're not seeing any remittance. So I think what you can do is to engage these consultants, and I think you should engage them professionally and say, okay, if so, you need to throw back, so you need to engage them tactfully and diplomatically, and ask them that if they are working somewhere and pension is being deducted from their own salary, can they allow that those pensions should not be remitted to their individual accounts? So I think you should start from there. So that way you are you are practically pushing it to them, and then so they can see that what they are doing is illegal, and then you can do like a detailed email, send to the consultant, copy the management, let them know the implication of this default. Because when the tax authority and the employees, when the complaints start coming in, the HR is going to get the brunt. So you need to take the bull by the horn and do something. Yeah, you need to do something. Yeah. So that's what I'm going to advise. Yeah, I hope that helps. Okay, I think our time is really
Yeah.
okay. We are just
So let's
our
quickly
time is really
take
fast spent.
Eunice.
Yeah.
Yeah, let's quickly take Eunice, and I'll take one or two questions and we move.
Thank you very much for the insightful session. So my question is still on the rent relief. So if an
Okay.
organization has over 1,000 employees, does it mean that we have to get receipt from everyone? Then for interns earning slightly above 800,000 annually, they don't pay rent, and then we cannot apply the rent relief on their salary. To me, I feel like they will end up paying more tax due to the absence of rent relief. So that's my question. Thank you.
Okay. All right. So of course, for the rent is a lot. So, but I think it's something that we can find a way around, because if you have 1,000 employees, it's the first time that's going to be an issue. So you have to get the receipt for everybody. And then when you want to onboard any employee, like new employees, you have to ask for their rent receipt. So that way you don't need to ask again. And if you ask once now, before you can ask again is next year. And most people, their rent is probably fixed for like 1 or 2 years before the landlord decides that they want to. Of course, they can be changed. But if you have like a column, just like I showed you on my demonstration, you have like a column that has rent. Somebody can be in charge of that. Just the thing is to get the rent receipt and then put the corresponding amount on the sheet, because there's a way you actually enter those 1,000 employees on your sheet anyway, because you have to enter their salary. If sometimes there are additions, there are deductions each month that they are not statutory, and you have to enter them manually. So this can also be done. But if you are using a system, you are like a payroll system, you can take advantage of that. That you just need to enter the rent. You also have, even if you are using a system, you still have to enter the rent. Yeah, but the thing is, you need to do it once in a year. I think that's another thing we also need to consider. So if you do it in January, you are not doing it again till the following year. Yes. And then, so for intern, so really, so the law does not recognize maybe someone is intern or someone is temporary staff. So you still have to follow the normal pay procedure. So if they are earning above 800K, and then but you should have pension. So if they contribute to pension, you can deduct that before you arrive at taxable income, and then so they have to pay. They have to pay taxes, ideally. But I also know that a lot of organizations, most of their intent is just pay them, no deduction, nothing. But it's not supposed to be so. Yeah. So if I'm not able to take your question, sorry,
Please, let me
Mr.
ask my own
Ujuku,
now.
yeah. So you can reach out to me. You can reach out to me on WhatsApp or
Yeah,
message me
the
on LinkedIn.
last question we have
Please.
Chinyere. Please quickly.
Yeah. Yeah, thank you very much. Thank you, Mr. Dekule and Doc. It's an insightful section. Please, my question is on where an employee approaches you and said, I don't want to pay taxes, I don't want pension, just pay me my money aside the payroll, or give me a contract where I won't have to pay all of this. Please, what's your advice on this? Maybe they've been paying them per their next, maybe a pre-opening section. And when you want to build a payroll and start doing the statutory, some of them will tell you, no, I don't want my salary to drop. Just give me a different contract, pay me aside payroll. Someone approached me today that, please, this new contract you want to, I don't think I'm interested. Just give me something and pay me outside the payroll. Let me keep getting what I'm getting. Please, what's your advice on that? Thank you.
Madam, so there's really nothing like outside of payroll legally, because it's either an individual is an employee or is not. So if like I said before, a consultant, for someone to be a consultant person, and even a consultant they still pay withholding tax. So you can't escape tax any which way. However, if somebody is saying that pay me this particular amount, the person is practically negotiating their net salary. And if the organization deems it fit that net salary is the person is you can pay that means you just gross it up, and then so you gross it up, you get your PAYE, you get your pension, and then you have your gross. But of course, the person negotiated with net, and then you can pay net. So I think this issue is the actual compensation. I think what you need to do is to get everybody's actual what they want to be earning, and then work back. But you know that now the cost is now on the company, and then seek approval from your management or the person that is in charge. But if you are not comfortable and you think you can't bear the cost, there's no big deal. If you are not agreeing with your employee on the cost to pay them, you can get somebody else. It's not. I don't think that is. You can always get people that are competent. There's nobody that is not replaceable. I know that a lot of people do a lot of work. There's really nobody that's not replaceable. So, and you can get other people too. That doesn't mean that you cheat your employees, right? But there has to be a common ground. And if you have agreed to pay them that as net when they are coming in, you can't deviate. So you have to still pay that. But if you agree to gross salary and then they are not saying now they want gross salary, no, then there has to be a compromise somewhere. So you need to know how. So it's either the employee take the hit or the employer takes the hit. Yeah.
Okay, thank you very much. That was quite explosive. Just in the spirit of fairness, two last questions on the chat. One from Anita, who is asking for explanation about the calculation. She says, are you saying tax is now on 100% salary and there is no consolidated relief? And the last question I would love you to respond to would be, again, from Anita. How do we know if our current employers are paying tax to be able to get a tax clearance certificate as an individual? That will be the last questions for tonight. Thank you, sir.
Okay. All right. So for the consolidated relief, there's nothing like consolidated relief anymore. But of course, your tax is not on gross salary because statutorily you are supposed to be paying pension, contributing to the pension scheme. So even if you don't have anything, you have pension. And then if the employee is also contributing voluntary to the pension scheme, that also deductible. And if they are doing any checks, also deductible. And if they have some of those benefits that I've said, those relief that I've mentioned before, you have to get approval for them. And then there are also things that can use to reduce the gross salary. However, there's rent. So, but the rent is that it has to be 20% of the annual rent paid, or 500,000, whichever is lesser. So there are other relief, but the thing is, if you look at it, the considered relief was actually very huge, or is huge because we're still using it. But it has been scrapped. So you have rent relief among others right now. And then, sorry, I forgot the second question.
She asked how to find out if the employer is actually remitting tax so they can collect their TCC.
Okay, so for normally, you are supposed to get a notification every month when your employer pays tax on your behalf. However, there are different ways at which companies pay tax, and you might not get the notification every month. But again, you will know if they pay your tax by February 1st. If you have access to your dashboard, that's your especially if you are in Lagos State, you can log in. That if you have tasking, number one, you have to have tasking. So if you say your employer are not paying, do you have tasking? I think that's the first question. So if you have, then they must have been paying. And they are going to file. And their filing deadline is 31st of January. So when they file, you are going to see it on your own dashboard. And for Lagos State, if you just go to returns and you go to employer, you will see what your employer filed for you. So if they file for you, they have practically paid tax on your behalf. Yeah. So you might not see the monthly payment, but the filing, because if they pay and they did not file, it's more as if they didn't pay, because you can't claim through the receipt because you are just going to see that they paid. But if there's no filing, if your employer don't file, you can't file. And if you don't file, you can't get TCC. So filing is actually more important than the monthly notification that you get. But ideally, you're supposed to be getting the monthly notifications that you paid. And then you're also supposed to get, also when you file, you're supposed to also get a notification. But eventually you didn't get a notification, just log into your account. You see the employer filed section. You see how much they filed and all of that. Hopefully it's in line. If it's in line, fine. If it's not in line, you can take it up with them and say, you deducted so amount of tax during the year, but this is what I'm seeing that you filed. And also you need to understand the amount. So because if you don't get the calculation of the amount, you might actually miss it. So, but if you understand it, you can just verify and then you file too. Yeah. So that is
okay.
So immediately you file, you get 26.
Thank you very much. And just also keep eye on your payslip, because that will probably be one of the evidence you want to use to follow up with your employer. XYZ was deducted, but ABC was paid or filed. Having said that, ladies and gentlemen, we have come to the time to draw the curtains. I see a lot of people asking where they want to rewatch this massive lecture again. They want the recording. Unfortunately, we can't send it to you individually, but like Titilobe has been responding to very many of us, it is available on the YouTube channel of our mentor, Dr. Oliemi. It's very simple to find. Just search Oliemi Adeosun on YouTube, and you will find him. So just on here my screen very briefly to show you that it is easy to find. So this is it. So you just browse. Let me know you can see my screen.
We can.
Hello. Okay, good. Okay, so you just browse Oluyemi Adeosun. You will find a lot of videos. All the tutorials, all the webinars we do are fully recorded, and you can, pick the ones that are of interest to you and watch them. A lot of resources here, and you can check from the playlist also to choose the categorization. If you want to, watch videos on HR trends, standards, organizational behavior, industrial relation and trade, it is carefully categorized for you, to quickly find what you're looking for. So please don't dull. Make sure you are here. And we will be having another explosive session on Friday, 14th November by 7 p.m. Make it a date to understand basic finance for HR. I hope you will not miss any of these sessions. So at this point, I want us all to unmute and say a big thank you to our facilitator and say good nights, please.
Thank you very
Thank
much,
you
Mr.
so
Dikula.
much,
Thank you,
Mr.
Mr.
Adesola.
Thank you.
Thank you so much.
Thank you very much.
Thank you and good night.
God bless you. God bless you. Thank you.
God bless you.
God bless you.
Thank you, Adesola.
Thank you, the presenter. You've done a nice job. God bless you. Thank you.